Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1654 AN. Today's date is September 2nd, 2018, and the title of the episode is The Plan, Deploy Economic Leverage to Weather the Economic Storm. Now, before I get started, I just want to make an announcement. I uploaded a new interview with V. It is on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to the interview. Or you can come over to the X22Report.com or NewsSentinel.com site. Scroll down a little bit. Look over to your right-hand side. You'll see the video there. You can play it right on the site. Or go to Steemit. That's steemit.com/@X22Report. And you can play it right on Steemit. Let's get into the economic collapse financial news. Now, because of the central banks and the deep state and, pushing war across the globe, the United States, the global economy, it is drowning in debt. And this is all about the central bank system where their product is debt. To put every single country, every single person into debt to control individuals. And also to push wars to cover up when they need to switch to a new system because their system's only designed to last for a certain period of time. And if we look at what is happening here, we see that America is drowning in more student loan debt than ever before. And when we look at it, we can see that student loan debt bubble has now grown to $1.4 trillion. In 2007, the total amount of student loan debt in the U.S. was just $545 billion. Over the previous 10 years, student loan debt has grown by a staggering 176%. Americans now owe more on their student loans than they do on their credit cards. In 2003, student loan debt accounted for 3.3% of all household debt. Today, the number has grown to 10.5%. The current student loan 90-day delinquency rate is 11.2%. 30% of all student loans in the United States are either in deferment or forbearance. The most common reason a loan is placed into one of those categories is because the borrower cannot pay. It is being projected that a whopping 40% of all student loan borrowers will default on their loans by 2023. From 2007 through 2017, college tuition costs jumped 63%, school housing surged 51%, and the price of textbooks by 88%. In 2001, 18.6% of all U.S. households led by someone in the age range of 18 to 34 were carrying household debt. Today, that number has jumped to 44.8%. Each year, more than 1 million Americans default on their student loans. So as you can see, the central bank's plan, the deep state plan, it has worked throughout this period of time. And what we're seeing is a reversal of everything that they've done over the many, many years. And we're going to see this dismantled piece by piece. Already, as we can see, Trump was out there and he was talking about Amazon and the post office. And, nobody could figure it out. Like, how do they have the ability to ship for like almost nothing with all this free shipping and things like that? Well, it turns out that the post office and Amazon, they made a terrible deal. Good for Amazon, bad for the post office, bad for the taxpayers. And right now, they're looking into this. But the Senate, they've delayed a hearing on the U.S. Postal Service reform, and they're postponing Trump's fight against Amazon. Now, the hearing could have scrutinized what Amazon and others pay for package delivery, which Trump says is the cause for the U.S. Postal Service $65 billion loss since 2009. So he ordered a task force in the month of April to study the Postal Service, to look at its financial health and what it charges customers such as Amazon for package delivery. And they haven't released a report yet, but the Senate already canceled it, and the task force is continuing their work right now. So what we're going to see is we're going to see each and every piece looked at and scrutinized, because we need to understand the central bank, the deep state, when they pass laws, it wasn't to benefit the American people, even though they put the titles up there where it looked like it was going to benefit the people, like the Affordable Care Act, like the Patriot Act, and all the other acts. The titles sound great, But when you start reading them and you really understand what they're actually doing, it is not great for the American people. It's great for other corporations. It's great for them to put more money into their pockets. It's great for the central bank, but not for the everyday person. And Trump tweeted back in December 29th, 2017, why is the United States Post Office, which is losing many billions of dollars a year, while charging Amazon and others so little to deliver their packages, making Amazon richer and the post office dumber and poorer, should be charging much more? And then on March 29, 2018, he tweeted, I have stated my concerns with Amazon long before the election. Unlike others, they pay little or no taxes to state or local governments, use our postal service as their delivery boy, causing tremendous loss to the U.S. and putting many thousands of retailers out of business. So we can see that each part of what has been going on is going to be reversed. And we're already starting to see this. TPP was very easy. All you had to do is say, no, we're not going to be doing this. NAFTA is being renegotiated, and I believe this is just the beginning. I think they're going to have to renegotiate this even further down the line, but this is all they can do at this point. We're also going to see other things within the economy completely change. The way the central bank operates, where most likely it will be taken over by the people. It will no longer be independent. It will no longer be a corporation. And what is happening here throughout, not just here in the United States, but throughout the world, they're changing it up. And the Trump doctrine is easiest described as deploying economic leverage to achieve national security interests. And what's happening here, not just here in the United States, but in many different parts of the world, everything is being changed. And the EU, the central bankers, IMF, BIS, the Fed, they don't like it. And right now, they are completely changing everything. Everything that we've seen in the past where they were giving aid like to Pakistan, well, they're removing the $900 million to Pakistan. The aid that was being given to Syria. Remember, all this aid, all these millions and billions of dollars, it wasn't really going to what they said it was going to. It was going to other things, to fund different operations. And it was always siphoned off. This is why there was always these funds that were missing, especially in Afghanistan. Billions and billions of dollars. Nobody knows where it went. And what's happening right now is that each part is being cut off to allow us to transition into this new economic system. And you cannot continually spend like this and support these covert operations and funnel these funds into all these different operations when we're moving into a brand new economic system. It just won't work. So everything the deep state, the central banks have been doing, everything is being rolled back right now. And we know that the economy is in this gigantic bubble, not just here in the United States, but globally. It's just one gigantic bubble. And it's been built up because this is the only way they were able to fund everything, is to prop everything up and inflate the bubble as big as they possibly could. Now, when we look at this, we can see that these bubbles are eventually going to pop. That means the system is going to collapse. And when we start to really take a closer look at these bubbles, we can see once these bubbles do pop, well, we're in for a huge amount of pain for certain individuals who have been preparing, some people that have been preparing, and those who really hunkered down and said, I know this is coming and I am completely prepared. Because when we take a look at the Federal Reserve's household balance sheet, we see $33.6 trillion is in non-financial assets. $81.7 trillion is in financial assets. $15.6 trillion is in total liabilities, $10 trillion of which is home mortgages. $100 trillion in net worth. So $25 trillion is in real estate. When the housing bubble pops, $10 trillion will go poof. Maybe $12 trillion. But we can see that it's just going to disappear. Consumer durables are worth $5.7 trillion, minus consumer debt of $3.8 trillion. As we know from 2008-2009 recession, the value of used boats, barbecue grills, assorted other types of things dropped to near zero. So shave off the phantom $2 trillion in consumer durables. Stocks held directly and indirectly, $28 trillion. Stocks are overvalued by half. So once reality sets in, $14 trillion will vanish into thin air. Non-corporate business currently worth about $11.9 trillion. In the depths of a recession, many will close and market value of the struggling survivors won't be much. Let's say $5 trillion vanishes. That's $30 trillion up in smoke. And we haven't even gotten to the pensions and $15 trillion in other financial assets. We're only rich until the bubble pops. Then we're broke. And they know that this is coming. They're preparing for it. They know that this economy is one gigantic illusion. And what needs to be done is a lot of this stuff needs to be rolled back. We need new deals to prepare the entire system for the next phase. And that is transitioning into a brand new system. And that's where we are headed. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.